Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I'm sorry I'm just running late today. I don't know what my I don't know what the deal is, but I didn't wake up very well. Hey, well, we got some numbers here coming out in a little bit. At New York Empire State Manufacturing Index, looking for an estimated 21.6 coming up in about a minute. So let's just come over here. That's a little bit too loud, isn't it? So let's just wait for a second before we go into the charts, because I do want to see their reaction to this number. Does it say, oh my gosh, that's so funny. I set it to go at 6:30. That's funny. No. Schedule should be 6:20 a.m. That's funny. AF. Save. Okay. There we go. Let's do this. We might get some movement today. This week is going to be interesting because there's not as much significant news this week as there was last week, but we still got some stuff. We'll see if they move. Okay, so here's the news. Excuse me. Is this not? Oh, okay. New York Fed manufacturing actual 30.9, forecast 22, previous 19.8. So that's good. But they're not really reacting to it, but it could increase rates here. So let's go to the charts while that's going. Okay. S&P 500 ended pretty good. They were a little delayed. They were a little delayed on Friday, but they ended up on the week and a good overnight move. Treasuries rebounding from the absolute beating that they took last week. There's still some room on the downside, although I don't know if this downside right here was maybe overdone, right? So oil also down pretty good overnight. There's some concerns about demand again, like Austria going into mandatory lockdown for non-vaccinated individuals, which is kind of crazy to me. But there's concern that there's going to be more waves in the winter, and that it's going to affect Europe and other countries. So natural gas is still down, so I guess that's good for the Europeans over there on that front. Gold and silver up near their highs from last week. So I tell you what, I am starting to get really bullish on gold. Watching this chart and seeing the setup and the risk profile and everything, I may need to add more money to that. And we got to come and look at the Bitcoins. The Bitcoins trying to recover their little downside that they had over the weekend. This action is a little weird and seems to be coming out of nowhere, but we are getting towards the end of the month, so it may be people just distributing before Mt. Cox risk event. Dollar up above 95. Can you believe that? Hey, we're all concerned about inflation, and yet the dollar's strong. Okay. That one doesn't completely compute in my head, but I think that there's a little bit of flight to safety going on right now, because even though there's inflation, it's like inflation everywhere, right? So that's where we're at. Do we have anything else today? Well, we've got some bill auctions at 9:30 today, so we should keep an eye on that in the treasuries. Anyways, I did not have a chance to eat. You know what happened was I woke up. Well, first of all, I didn't wake up very well, but then second of all, I hadn't completely fixed my setup up from tearing it down and recording over the weekend. Which, by the way, we will have a video out again today. It's not the best. The audio in it didn't quite turn out. So I'm thinking that the last of these, so I think that there's going to be at least 2 more, if not 3 more. But I think I'm going to wait and get some curtains for this wall over here first before I try doing it again, because the echo coming back and forth was so bad. Like this way, it's fine. This way here in my studio, it's fine. It catches it. But that wall being bare and that wall having the chalkboard on it. So I think what I should do is I should order some panels, get some dark blue colored panels to go there, and some curtains to go there. Anyways, so I need to eat. A rug might make a big difference if you have a hardwood floor. But I think you should probably, like those foam panels, that like acoustic foam stuff, doesn't do squat. Doesn't do squat. It's not heavy enough. But the curtains I was looking at, I'm gonna have to get a quote. I don't know. We'll see. We'll see what happens. But the curtains that I found are packed with loaded vinyl. So those should really block sound, right? Yeah, so on my normal videos, there's not like a crazy bad echo, right? It's because of the direction I'm facing. Like, I have these corners done and that corner back there done, right? So that sound gets diffused and absorbed really well. But if I'm sitting at the chalkboard and speaking directly towards the door, those are 2 hard surfaces. So the sound is just bouncing directly off there and going back and forth. So if I can put curtains on the door, right? We got to address the actual issue, which is that freaking wall. Maybe even add. I'm even thinking we should get some panels that just go on the side of the chalkboards, like above the board here, to give it some color. Well, I don't know what to do about that either, because the chalkboard kind of has a reddish color to it. I didn't know what to do about that because everything's blue. Nah, I get real soundproofing. You know, real. Look at this. Look at this. Real soundproofing here. Look at that. Huh? I have real panels, fiberglass inside of them, acoustic material over that's transparent so that it really goes in there and gets absorbed. Nah, we do this. I do it the right way because I got the studio monitors and all that too. And I can tell when I ran Rue, I could tell there was some comb filtering on the going back and forth, but I did not expect. I think it was probably a combination of the lapel mic being an omnidirectional mic too. The reverb was so bad. Just so bad. Okay, they are taking the cell here now. That was a relatively large take there at 24. Let's see if they decide to continue on this. We could try taking it long here. There's probably there could easily be 3 basis points in this. All right. Now we got that through. Okay, so the 24 did go bid again. It's holding 1,000, and they're actually... Okay. Actually, even the 24 half may be being tested here. So, even though I see a possibility that rates could rise here again, the volume is pretty weak this morning. Oh, there you go. Look at that. Well, that's a little different, isn't it? That was maybe a little bit much. They might have to come back from that. They made 24 test a little bit. Nobody bit, and so then it just went. Wow. I'd still say volume is kind of weak, but that was a relatively aggressive move, and it was being driven by the 30. Which means a slight bit of steepening, right? Keep an eye on it here, see if it goes for another one. But the way that it's acting right now, it kind of makes me think that they're gonna come back a little bit maybe first. We'll see. Let's reset it right there. Yeah, that first video did really well. It did really well. In fact, let's go back and let's go and look. Because it wasn't doing as well as the hardware video, but it was like the second best performing video. Yeah. Like it's still, so the trading computer hardware video gets like 300 views a day. This one, the Ninja Script one and the Order Flow one are getting 31 and 47 a day, or for every 48 hours. So it's really good. That's a video that is going to track well. So when we get all of these order flow videos out, it's probably going to bring the channel video views up to a new level. Good morning, Uzi. Please tell me you're short. Did you catch any of that drop in ZB, or were you chasing it like me? Because I was quite surprised how quickly it went. $22. Maybe you would have. Oh, you just sat down. Okay. Well, So we had New York Empire State Manufacturing Index came in at 30.9 versus an estimated 21.6. The Treasuries initially looked bearish on it, but didn't really go much anywhere. Then I saw the 10-year come down to 24. Kind of looked like it had taken that out pretty aggressively, but then they just stopped. They ticked back up. Nobody really went for it at 24.5, and then they just like immediately flipped down. And I think that probably the reason they immediately flipped down was because the 30-year was driving them. But then the 30-year just dragged everybody down under the water. It was pretty it was pretty interesting. Now you're starting to see some activity pick up. But they've just extended it twice now. So I think that there could probably still be more left in this meta order. The amount of cumulative delta difference in both the 10-year and the 30-year is still relatively mild. So if we're seeing a large meta order come through here, and by the way, I'm not seeing any kind of currency correlations or anything like that at the moment. I'm not even really seeing gold move either. So in terms of, kind of our fundamentals and correlations and everything, or sorry, not even really fundamentals, in terms of our correlations and our volume and everything, there's a chance that this could continue even from here, even though that looked like a pretty aggressive move, right? No, I still haven't been doing the robot. I need to get to that. I mean, like, I could turn it back on. It's just like, well, I really should, because I could be collecting data still, but I feel that it's just not going to be impressive. Like I need to add another component for it to really be worth trading. So as it stands right now, like, it seems like it makes money in the long run, but it's really iffy. It's not very consistent. So they kind of came up for a little bit of air there, but then that didn't track too well. Okay. 3,000 into 21. Now, the 30-year is seeing some big orders there too, though. Okay. Wow, only 96 to get through 14. Okay. I'm still not really seeing much of anything else moving. I do see that the S&P 500 is kind of testing their like their average true range stop there. You say below 1310 is the next target for an extension? It's a little curious to me because I do kind of feel like that they're doing some things here that could, you know, could maybe be a short-term pullback, but the pressure doesn't really seem to be letting up, does it? But there was some volume in through here in the ZB. Biden is expected to decide as soon as this week whether to appoint Federal Reserve Chairman Jerome Powell or Governor Lael Brainerd to a 4-year term. That'll be interesting. If it was me, if I was Biden, I would be thinking Powell, because Brainerd, you want Brainerd in there because you're trying to make a big change to the Federal Reserve. Like, you don't like their policy. You want them to be more progressive, quote unquote. And if inflation is a big concern and everything else, you don't want to rock the boat, right? But we'll see what he does. I'm sure that they're likely to just really like Brainerd. But like, again, from the things that I've seen, Brainerd was never like a stooge or anything like that. Like, she's a smart cookie, and when she disagreed with the rest of the board on things, it was kind of more on the edge. It was very nuanced stuff, right? So this idea that she would come in and be like a drastically different Federal Reserve is, I'm not so sure that that's a realistic expectation from the left. You know, like, going into the pandemic, that was Powell's Federal Reserve. The whole mess that went through in 2018, that was what he wanted. He wanted to be more aggressive, and you know, that was kind of the edge case, whatever. You know, since then, I think that the Federal Reserve is just responding to the numbers and trying to position policy the best they can for all of the risks that are involved. And I'm not too sure that the policy would be any different if it was anybody else in charge. You didn't realize that Lael was a female, yes? Well, I don't know if any of them really care that the regular voter doesn't really know or care who is in charge of the Federal Reserve, unfortunately. But that's the thing that's kind of interesting about it, right? Is you sit down and you say, oh yeah, the people in charge of the Federal Reserve have a lot of power, and people try and make a political deal about it. But the problem with that is that Federal Reserve policy is very data driven, right? Now, there are some ways in which they use that data that probably need to evolve. But in order to get them to evolve, you're going to need data to support that, right? Hence, their change to average interest rate targeting, for instance, they had data and a whole bunch of math about how to do that. Okay, well, they didn't quite touch 10 in the 30-year, but awfully close. I'm sure that they'll probably tag that. The low from last week is 06. And then you got, I don't know, 161 even in the 30 is maybe a reasonable target if this is going to be like continue to be a really strong downtrend day. Because at the moment, they're still mostly just washing out the overnight bubble up. Close only counts in horseshoes and hand grenades, yeah. Like, the way that it behaved at 11, that wasn't to me like, okay, they're done, Wait, what? Jen Psaki? Sakai? I don't know how you say her name. For anyone who needs to hear it, Vice President Harris is not only a vital partner to the President of the United States, but a bold leader who has taken on key important challenges facing the country, from voting rights to addressing root causes of immigration to expanding broadband. Okay, yeah, that doesn't... I guess they're really concerned now that nobody likes Kamala Harris. Okay, there's 10. You know what I think is interesting about the Kamala Harris thing? She didn't do anything. You know what I mean? Like, there wasn't a catalyst for America to start hating her so much. Like, honestly, it feels like she really hasn't been all that prominent in the news. Is just that her reputation for kind of being two-faced or disingenuous just kind of like grew and grew and grew and grew. But there wasn't, like, usually for a politician, when you get a really negative approval rating, there's like some sort of catalyst. There's some event, there's something that you did that the voters really didn't like. That didn't happen with Kamala. Now, maybe perhaps that means that they could rehabilitate her image more easily, but I think it kind of speaks to a more systemic problem with her and her history. Like, if Biden is to run again, and honestly, at this point, I don't see how you do it. I think that he would. I'm thinking that he'll come out and say, "Yep, I was only going to be a one-term president. I'm only a one-term president." But we'll see. But if he was going to run again, I think that he would want to get rid of Kamala on the ticket, because everybody's sitting there going, "Well, I really don't think Joe Biden has done a very good job, but I don't want Kamala in charge, right?" Kamala's mad disingenuous even for a politician. Yeah. Like, I kind of look at her record as a DA, and that just kind of looks to me like, she did what they doing at that time. And now she's turning around and she's doing what is, okay, so that right there is different. I'm going to go on the off chance that they're going to come back a little bit here, because that's a pretty big stack at 19, relatively speaking. And it's the most significant change in the book we've seen since this move started. And since it is a Monday, her reaction to anything challenging by laughing hysterically is more unnerving than Trump's blow. Well, yeah, the way that Biden reacts to anything challenging is really unnerving, yeah. The way that Biden reacts to being challenged about anything is really like, how is this guy president? I mean, I get you're going to get a little frustrated by the media, but his reaction is like really off-putting. Obama was really good at it, right? He was really good at showing his frustration, but still doing it in a way that his proponents were like, yeah, you get him, Obama. But when Biden opens his mouth, they're all just like, no, stop talking, please. Where's the handler? Do something. Okay, the 5 and the 10 have come back up a little bit, but I would like to see that 30 tick back up at a 10 for me to feel super, super comfortable. Well, not comfortable, but feel a little bit better about getting out there. I also want to point out that a bunch of retail traded up in that area. Isn't that interesting? In the rates. Okay, so they're hitting into 19.5 and a little bit of reloading. But that was driven by the 30-year taking another step down. The 30-year could very certainly drag them lower if it wanted to, huh? Now on the split side of that, though, I don't think that that's why voters dislike him, right? Like with Joe Biden, I really think that his unpopularity is because his policies are doing very poorly. He's having the problems that he is because he literally went in and did everything to promote the progressive agenda. And it turns out that Americans don't really want that. Turns out that it was a small 10% of the population that was really pushing that hard. Okay, so they pulled at 19. Maybe we could maybe justify getting back in or holding it. Does kind of look like they're maybe going to go for some more now. Racially preferential policies aren't popular. Well, I don't even think it's that. Like, just start with Afghanistan, right? Start with Afghanistan. That was such a disaster. And then he didn't apologize for it or anything like that. So that really destroys people's confidence, right? And then you start getting the inflation thing. You go, oh, the one thing that they've done now, their stimulus package created inflation. Great. And then you look at what they're trying to push right now, which is just more like more spending on a bunch of stuff that it's like, I don't think that they've really made a good case that like we really actually need, right? Like think back to Obama, for instance, with the big healthcare debacle under Obama, right? And there was a real push that they really believed that like this was a thing that the country needed to push forward. I don't agree with their approach to healthcare. I don't think it solves the problems, but the people on the left were definitely energized about that issue, right? Now you look at the spending and the left will say that they need it, but I don't really see the drive there for it. You know what I mean? And so I think that that's a big part of the problem. Generally, people can generally ignore or forgive stuff like that. I'm not so sure. Yeah, and then So I think that the issue is that you just look at Afghanistan. They're going. I could have held it. That war order probably wasn't enough for me to shouldn't have been enough to scare me out. I think because it was a Monday, but clearly that was just kind of a little bit of a trick. Anyways, it would definitely make him an unpopular president. That sort of a blow is like really hard to come back from, but I don't think that it leads to like these historically unprecedented, almost like people despise him now, right? But the vaccine mandates and stuff and pushing it on the kids, that definitely does, right? So what was the price that I got out at? 8. 1, 2, 3, 4, 5. Yeah, I could have gotten it. Even if I had stayed in, I would have to be considering getting out at 96 here. Or, sorry, 95. 95, 96. Maybe I would be taking 96. I'm not 100% sure what I would do. Did you see that article in the Smithsonian about how climate change is going to result in heart disease? No, what? I've not read that one. Bank of Canada's Governor Macklem, the Bank of Canada is getting closer to raising interest rates. That's why we're moving. Ah. The change in Delta is now significant. So even though I don't really see anything in the flow changing at the moment, this might be a spot they might have to think about moving. Okay, so there it clicked again. Interesting. I think that volume there is just stacking because that's like the low area, but oh, you think you need a scapegoat for heart problems after babies are born to vaccinated mothers and kids get loaded? Yeah, I don't know. I am concerned that not enough study has been done on the proteins in the virus and why they seem to be harmful to the circulatory system. There was a study done in Israel where they tested different proteins and they isolated the proteins that seems to be causing the problem. And I don't know enough about that to read into how big of a deal that is. But another thing that I find interesting is that there was this story out where the CDC admitted that there hasn't been any confirmed cases of recovered natural immunity individuals passing the virus. Did you read that one? So like is is pushing the vaccine maybe actually hampering recovery? If that was the case, I don't think that we have any evidence to say that, but it's a theory that you have to be asking yourself, right? Why couldn't they make the COVID vaccine the same way they do the flu vaccine? I don't actually know. I think the issue is getting the protein, like generating the protein and getting it in there. Let's research that. Let's see if we can find out. I understand how it works, but I don't understand why. Traditional vaccines put a weakened or inactivated germ in our bodies. Messenger RNA vaccines, like the Pfizer and Moderna vaccines, teach cells how to make a protein that triggers an immune response if someone gets infected. When the vaccine is injected in the upper arm, the mRNA enters cells near the site of the injection and tells the cells to start making the same protein that is found in the virus. The immune system recognizes this protein and begins producing antibodies that can fight the virus. Blah, 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 blah. I don't think that it's quicker to develop, per se. They did rebound there quite strongly there, didn't I? So I probably got out a little bit early, but I think that I was making the right choice by not immediately getting back in. What is particularly unique to mRNA is the ability to rapidly generate vaccines against new diseases. That I think is one of the most exciting stories behind this technology. A key advantage of mRNA is that it is very easy to synthesize once researchers know the sequence of viral protein that they want to target. Most vaccines for SARS-CoV-2 provoke an immune response that targets the coronavirus spike protein, which is found on the surface of the virus and gives the virus its characteristic spiky shape. With traditional vaccines, you have to do a lot of development. You need a big factory to make the protein or the virus, and it takes a long time to grow them. The beauty of mRNA is that you don't need that. If you inject a nano-encapsulated mRNA into a person, it goes into the cells, and then the body is your factor. Oh, there you go. So you're correct. It sounds like you're correct, Uzi, that it is quicker. And it's quicker because they don't have to create all of this stuff to build the protein. Your body builds the protein. Because building the mRNA is apparently relatively easy. But see, to the concern that you're expressing here, though, it being an mRNA vaccine, I don't think matters at all. Right? The concern that people are putting out is that the proteins in the coronavirus are harmful to your heart. Just in general. Okay. And I don't think that this is conspiracy theory nonsense, because this was something, remember at the very beginning, everybody were like, yeah, but you don't know what the long-term effects of getting the virus are, you know? Well, it seems to me there are long-term effects. I tell you what, I haven't been quite the same since I had coronavirus. Like I always feel like I have a little bit of gunk in the back of my throat now. I get tired more easily. I haven't really been able to like really get hardcore into working out quite the same. It just hasn't been the same. And there's been a lot of evidence that it leaves lasting damage to your heart. I don't know if it's like a huge deal, especially for healthy people. Like it's not like the end of the world, but it does have a lasting impact. And so the question was why? And it seems like they did isolate these proteins, but apparently there are some proteins in the coronavirus that are just straight up harmful to your body to even have in you. So whether it was a traditional vaccine or not, you would still have those proteins in your body, right? if you consider the mere existence. Well, but like that's what I'm saying is like you understand that I don't see anything about how an mRNA vaccine works that could create any kind of unique side effect, a long-term side effect. Okay. But I do see that there could be something about the virus itself that has long-term side effects. And so these are problems that you're going to have regardless of whether you got an mRNA vaccine, a regular vaccine, or you just caught it naturally. Now, when I think about that, I think, okay, did the Chinese do something in this virus? You know, like maybe it really was an engineered virus. Because that just seems like really bizarre, don't you think? Like that, I've never heard of a virus that has long-term side effects to your heart. Have you? That seems weird to me. Yeah, they engineered a quality. So that's what goes through my head when I think about that. But obviously we don't have proof of that. But they are looking like that's the thing that kind of makes me go, is that like they're looking? Why would they be looking if there wasn't reason to think that was a viable theory, you know? So I gotta be careful because I don't want to say something that's like misleading or untrue or anything, but we should be on the lookout for like new information and like what are the next possible shoes to drop. What is your blood type? I think I'm O positive. But why does that matter? On that bounce in the treasuries, by the way, that did kind of look like a manufactured, like not a manufactured, but there was something down there looking to bounce it, and they did it 2 times in a row. So it was like they did it the first time, it didn't really take, and then they did it the second time and it worked. I remember reading that COVID is a little bit less impactful on O types. Oh, that's weird. I have to look at that. Well, that goes back to these rumors that the Chinese have been trying to develop viruses that would like affect different races differently and stuff. That one was kind of a little weird too. And then there was that whole thing about how COVID did apparently have a more drastic effect on African Americans, right? That was like the more melatonin that you had, the more likely it was to be severe. Am I crazy? Am I misremembering? I think that was last year, though. Yeah, it might. And there's probably where a lot of things where they're like, they think maybe, or maybe there's some, but then it was never proven and we don't remember what happened, you know? That sort of stuff just happens so often. The only conspiracy theories I really roll out are involve ghosts and reptilians. Oh, man. So there's this new show on Netflix. I forget the name of it, but it's basically a Simpsons kind of style of cartoon. Although I do think it's different creators and stuff. Actually, maybe it's a little bit more like Family Guy. Yeah, it's like Family Guy, and they are a secret. A private organization that helps the elites, in particular, like the Illuminati and lizard people and so on and so forth, to control the world and stuff. And I think it's pretty funny because it's like Family Guy in that they really, really push inside references, or not inside references, pop culture references, but it's, instead of it being pop culture references, because in Family Guy it's always like this actor and you don't know anything about that actor, so to you maybe it's not so funny, but instead it's politics and news. So I think it's hilarious. What do you think about crypto bots? I think that I have an opinion on this. You asked a question that I normally would be like, what about them? But I have an opinion on this. I think that there are a ton of people out there in the cryptocurrency space developing robots that think they have a really good robot, and it's complete bunk. That it is just a factor of the current environment that we're in, where they are literally printing billions of dollars of Tether at once. And so, like, everything's going up in the cryptocurrency space because of that. And so there's all these people, robots in particular, but there's plenty of people that are just trading in general that think they're absolute geniuses because they've had success in cryptocurrency. And the reality is that it's not a very good strategy. And at some point this is going to end and they're going to get burned hard. So I would be very, very cautious about these people out there trying to sell cryptocurrency robots, because it doesn't work that way. And these robots are often very, very simple and are using things that I just know when things fall apart, they're going to blow up. Where can I find sources that prove there are people who day trade futures or other instruments and are making money over a long period of time? I'm not looking for education, just a question. Well, I can think of one. I can think of one study that you would be interested in. Hold on. I need to fix this camera here. Hold on. That's a little better. Let's see if I can find it, okay? Here it is right here. Yes. So here is a study I found a while ago. You guys ask good questions today. Thank you. There's something else I want to talk about with cryptocurrencies, but I want to answer Jiffo's question first. Okay. We examined the behavior of a 15 strong proprietary stock trading team. Oh, but these guys aren't necessarily doing futures, so maybe it doesn't answer your question, huh? Because they're doing stocks. But well, here, let me read on. We examine the behavior of a 15 strong proprietary stock trading team and show how consistent intraday trading profits were generated. The team, who worked for a large U.S. direct access trading firm, executed over 96,000 trades in 3 months in the year 2000. Profitable intraday trading occurred in an anonymous dealer capacity on both long and short positions, especially when volume and price volatility were higher. The traders rapidly entered long or short positions when the number of dealers and size became greater on the bid side of the spread. Profits were taken early against the trend. Okay, so what does that mean? They're watching the bid and the ask here, and if the bid, okay, so like right there where the ask became so much larger than the bid, then they were selling it and trying to catch the spread, is essentially what they were doing based on that explanation. So they were using order flow. They were doing it in stocks, and they had direct access, which is different from what we would do, or what you would do as a retail trader if you're trading stocks. But and it was a long time ago too, so they probably wouldn't be able to have success with that today because of the robots. But can they do it? Yes. And then came Arca, yeah. Well, it's really not even Arca. It's something that we got to understand, that I don't think enough people do understand, is that it started to happen before 2008. How do I explain this? There's a story to tell here. I made a video on TikTok the other day about regime changes. So I'll just cover regime changes very quickly. What will happen is that a particular strategy will start to do really, really well in the market. And the people that use that strategy will become very, very powerful. And the more powerful they become, like the more it seems like that strategy seems to work. And that strategy will kill off other strategies. Until it's basically like nobody else's. That's the only strategy that's left. Well, the reason I say that is because there was a study where they did this research team. They created a stock game where there was a bunch of different players. There was something like 100 different players, and they were all trading like 10 different strategies. And if a player lost too much, then they would be removed from the game, right? And what they found was that eventually the market would go to a period where like only one strategy was being used, and then it would blow up. That strategy would blow up, and all of the people that were trading that would get removed, and then the market would have to reorganize itself, and things would kind of even out. More strategies would work, and then it would go, and it went through this cycle over and over and over again. But in their system, when it was only like one strategy was really working anymore, that was when there would be a crash. Okay, so what they're showing is some evidence through a simulation, of course, so we should keep that in mind. A pretty good down move here, by the way. Some evidence about how regimes work, right? A certain strategy will do really well. So, the strategy that's doing really well right now is reading options gamma, and trading based on the direction that the gamma is going. The problem with this strategy is it has a fat tail. There are periods where high volatility comes in and the options gamma doesn't work out. And when that happens, because everybody is so leveraged with the options, when it falls apart very hard. Okay. So I've seen some people that have been trading these kinds of strategies, and it's like, it goes really, really, really well. And then they lose like half of their profits. And then it's going really, really well. Okay. So like the risk profile of it is it's very risky, okay? But that's the strategy that's doing really well in the market right now, okay? So back in the 2000s, the strategy was order flow trading. It was, okay? Anthony Crudelli, how he made his money was electronic trading. He was one of the first guys doing the electronic trading, and he was responsible for like he was the largest single volume player on the CME and ES futures. Okay. And eventually what happened was robots came into this space and destroyed that strategy, right? So it was like the strategy became very, very important, but then the people that were trading that had a big enough drawdown. And Anthony talks about that he had a very big drawdown, and he traded it longer than he should have. And he lost a lot of his fortune from it. But he quit before he lost all of it. And then he moved on to other stuff. Okay. So it wasn't in 2008. It wasn't that like it changed. I've heard this thing that the intention of the tapers, which is just like, okay, where do you come up with this kind of What do you mean by the intention, and what kind of empirical evidence do you have for that? But what we do know is that there was already a change in the market in 2008, going into 2008, where robots were starting to take over. Robots were starting to compete with these humans. And then what happened was so many people got wiped out during the 2008 crisis with the absolutely insane volatility. Because really, the kind of volatility that we saw in 2008, we've seen a few times. And like, I think by now we're all kind of used to, there's like, every other year or something, there's like a big volatility event. But back then they had never experienced anything like even remotely close to that. So it was just like, imagine here if all of a sudden every day the S&P 500 was moving 1,000 points, we would just be like, wait, what? But that was kind of the degree of change that happened. And so a lot of traders got washed out. And that increased, it accelerated the change, essentially. It accelerated the change and the robots took over, okay? So there are some things that you used to be able to just straight up make regular, consistent money from doing that you could do in like 2005 that you can't do today. Very much so. Now, here's the thing. Just because there's competition and the robots will beat you on those things doesn't mean that it's useless now, right? In fact, it actually becomes even more important. Because it basically becomes a prerequisite to really even be competitive, right? Is you have to understand that game that they're all playing, and then you're going to have to take your own extension off of it and find other edge beyond it to actually have edge. You get what I mean? It becomes base. It becomes a prerequisite to being successful. And that's how I feel that a lot of basic order flow has really become. So like when I talk about catching the edge and icebergs, and I guess the opposite of that would be an alligator, but I didn't really go into alligator because it's basically the same setup. You understand it. Those are things that are like basics. Like you have to understand because there's so many robots out there that are just trading just that. And you probably aren't going to make very much money if you only just trade that. But you need to understand it first. Right? Then what you can do is you can take that and you can take some of the larger order flow things that I'm going to talk about in the last video, and you can use your fundamental information as well. And you can gain an edge, right? Now, are there people? I've seen people that make money from futures trading, but yeah, it's only like 5%. So that was my big long spill about that. Do you agree with Gary Norton or Grady's approach where you should focus on scalping? So I tried for a very long time to trade like exclusively off of what I had learned from Grady's beginner's course, and I didn't have success with it. I had periods where I had success with it, and I had periods where it didn't work at all. And maybe part of that was just like my understanding, because now it seems like I'll go through periods where I just can't lose, but I would say that I think that generally speaking, you need more than that. Gary's approach, I think that there really is something to Gary's approach. The problem with Gary's approach is that the amount of edge that is available for you with that kind of style of trading is very small. Like basically you have to go out and find a really inefficient instrument. Like I think you can do it in the NASDAQ these days still. Or you can go and find like a really not very heavily traded, very illiquid instrument with lots of correlations that you can trade to do Gary Norton's thing. So I don't think that Gary ever says that his way is the only way, obviously, right? I think that there's some real value to understanding how Gary trades, but I don't necessarily trade that way, right? The way that I trade is really more speculating, right? Speculating with the assistance of order flow knowledge. Man, maybe I could very much consider I got out at 88 right here. So you can see that there was another 20 bucks in it for me if I had decided to hold on. Or if I had back when it had come back at 19. Oh crap, what happened there? Where did my Dom go? Wait, what the heck? Did it just like crash? Oh, I accidentally moved it. Okay. I think it was like clicked and I moved it over to the screen. That's funny. Fellow could take along here in the ES. Yeah. Oh, we should do this. Let's fix that. There we go. Maybe. I'm more interested in the treasury, but I kind of feel like I'm like too late to the party in the treasury. If you trade ES with other DOMs, YMNNQ. Yep. RTY you can put on there too. And you don't necessarily need to have a DOM up for them per se, but I would be keeping an eye on the treasury yields. I would be watching what the dollar is doing. So I'm a little bit concerned about the way that the treasuries are increasing rates on them right now, that the S&P 500 might throw a little bit of a fit. Wait, what? The West Wing has largely thrown up their hands at Kamala Harris's incompetence and that of her team, and that the feeling is mutual, CNN reports. Really? That's weird. They came all the way back to 19, so that was another strong leg, wasn't it? Well, when did it start? Just as the E-mini started. That, which is about when we could expect, so gotcha. I think the issue that I have here in the treasury is that I caught the original trade, but then I got out. Once you get out, it's a little bit harder, right? Trying to find a good spot to get in again. I can a theme that I'm noticing in my trading as of late is that I am not making as much as I should. I'm not pushing them as hard as I should. Like, I should have taken that original trade. I should have taken it more aggressively, and I should I should have held it more aggressively, and I should have taken more contracts. I mean, I felt pretty confident about the trade, but I didn't feel like it was going to really run. I thought that maybe I was going to get the $10, and I got a little bit more than that, and I was like, okay, fine, now we're done. The market ear says gold squeeze. Well, gold is actually moving down a little bit right now. So that's curious. It seems to me like the sentiment in gold has changed, but they're still having difficulty. And I'm wondering how that's going to play. Is gold really going to continue moving up, and this correlation with treasuries will just disappear? Or will it just be that gold will move up other times, but then there will still be many times where the treasuries are moving down that will kill them? You know what I mean? It may just be that gold will be a really difficult trade. White House economic advisor Brian Deese told me the White House started tracking data on shipping containers. The first release of data on how many shipping containers are moving through U.S. ports will be midweek. Deese told me this will help show when the port system catches up with supply. Curious. Is AMP a good broker for a newbie? I was thinking to trade micros on Quant Tower for starters and then move to Sierra Jigsaw and trade a full contract, but now going for demo drills. Yes, that's so. First of all, I think you're taking the right approach. I talk about that in the video that should be live now, come out like 15 minutes ago. I think that AMP is as good a broker as any. I think that if you feel like that you really need hand holding and you're going to talk to support a lot, and you're going to need support's help, like setting up the software and like every step of the way, then AMP might not be the right one for you. But if you go to somebody else, you can get better support, but you're going to pay higher commissions. So pick your poison. Yeah. I think from having spoken to a lot of brokers, and I'm not like super great friends with them all, but I really feel that the guys at Optimus are the ones that are going to be the best hand holders. You know what I mean? Like that's their thing, is you just want to trade. You don't really know anything about the computers. Then you go there. Yeah, he says, nah, I don't need IT support. So yeah, so if you don't need the IT support, then AMP will be just fine. Yeah, so let me go grab the new video. Already has 4 views. I'm the guy who gets called. That's funny. Yeah, so there's my new video. I talk about catching the edge and icebergs, which is something that has been out there. Grady talks about this in his course, but I think I have a couple of details and things in there that you won't have heard anywhere else that I think are really useful things to know about. And I think that when you combine this all together, you'll see how the puzzle pieces fit together. Okay. Although it might be a while because we're going to have to get drapes before we do another video. Anyways, so yeah, make sure you watch that video and leave a comment. You guys left comments on the last video, and that made such a difference. So please on those the VODs, not the live streams, but the VODs, please leave comments. And it doesn't have to be a serious comment, right? You can just joke about something that you saw in the video, or even things that if you thought would help make the video look better. So I'm not seeing, it's not like super dramatic, but they are bouncing a little bit again. This time, though, it looks a little bit more like that they're settling into a maybe a little bit of a liquidity hole / trap at 130.15. I'm not seeing very much latent liquidity in that location. You know, there's not really, I don't really see any urgency to want to try and move it or anything like that. It just kind of looks like they're settling into it. Mm-hmm. My subscriber count right now is 6.69K. Bank of England Saunders is speaking right now, saying there is no danger of a wage price spiral. Oh, really? Okay. Not sure I buy that one. Sees 15. Worried Wilson sees 15. Who's that? Okay. I don't know what the marketeer is talking about there, but. Inflation will overshoot if policy is not tightened, says Saunders. We do have more speakers later today, right? Let me come in here and check on our Forex Factory. Oh, it doesn't have anything listed. I'm pretty sure there are some central bank speakers, though. Maybe they're not US ones, so. Tomorrow we get core retail sales. That's the big one, yep. FOMC bunch of speakers. Both Tuesday and Wednesday. Oh, there's so many speakers this week. Wow. Okay. They all speak in the same place? No, they're all doing something different. That's interesting. Would you be talking if you trade thinner markets like NQ? Well, for starters, if I was an NQ trader, I probably wouldn't be putting any live trades on right now. I think that I probably would have blown up an account by now since the last time I started an account. NQ does present a little bit more, like it requires a little bit more of your attention, but you don't necessarily need to be paying attention to it all the time. I suppose it depends on your style. If I was doing it like Norden style, I probably wouldn't be chatting with you as much, right? Like I would probably still be talking, but I would be talking to myself. I would be walking myself through. You can see I do it sometimes where I walk myself through. Okay, here's the step that I see. Here's the step. Here's the evolution. Here's the change. Because if you watch my order flow videos, if you're kind of wondering where I'm going, what I'm doing is I'm showing you here are the basic kinds of setups that you see, but there's kind of a larger tendency to the way that things work. If you buy, that has a tendency to move up, and if you have a sell, that has a tendency to move it down. So market orders hitting into a price, that has a, market buys, that's going to move it up. Market sells, that's going to move it down. Market or limit buys stacking down close to it, that's going to have a tendency to move it up. Offers stacking above it, that's going to have a tendency to move it down. And then conversely, those limit orders canceling, if bids cancel, that has a tendency to move price down. Okay, those six forces, there's kind of a tendency, and there's also a tendency for moves to kind of move and kind of come to a point where they can't really move much anymore because of the square root law when liquidity comes in and starts to hold it. And there's a tendency for, if there is a change and it's different, we're moving down, trending really strongly, and then all of a sudden a really big bid shows up down here, and it's like the first bullish thing that you've seen all day, that has more of an impact because of the inverse sine law. And then there's a tendency for a price to if a large number of transactions occur in a location, it can create a liquidity hole that can constrain price, right? And so what you can do is what we're doing is we're watching the individual little moves over time, and we're trying to judge those larger empirical things that we know happen based on the data and making a read on order flow. And then we're trying to use that to read what is going on with the more fundamental trade. Why is it moving down? Is there a large meta order going on here? If it's a large meta order, at what point are we starting to reach the square root law of impact? Right? That's what I'm trying to show you guys. So I'm now an NQ trader, and it's as tough as it gets. Even for micro NQs. No, when I've tried messing with the NQs, I had some success with it, but I think that would get exhausting after a while. So can I change the subject? This is almost the top of the hour. There's another thing that I want to talk about. Oh, and this makes me it made me so mad, guys. Like, I watched that video. I felt the anger brewing inside of me. Like, I can't believe they did this and they're talking about it. Makes me so mad. So what am I talking about? There was a video. I'm not going to show the video here because I don't know there's like problems with, like, you know, audio takedowns and all that. So my policy has been to just avoid it altogether, even though I think in this case it would probably be okay for me to show it. But it's a video of Mr. Beast and who was it? Who's his friend? Another famous influencer guy. Logan Paul. Okay, so it's Mr. Beast and Logan Paul, and they're doing like a podcast or something like that, right? And Mr. Beast tells this story where Gary Vaynerchuk, you know who Gary V is like this influencer on TikTok that like really took off, and now he's like the business guru everybody talks about. Happy that I discovered the future. I'm glad, because futures are so much more serious, I think. It's what you do in futures is hard. It's a different game from stocks, but I feel like it's way more serious and professional. And hardcore. It's the hardcore. Yep, it was Gary. It was an NFT thing. Okay, so Gary Vaynerchuk, I don't think that he started out with the NFTs. I don't think that's what made him popular on TikTok to begin with, but he has been very much into NFTs. Okay. Here's the thing, and this isn't a knock. I don't really know Gary all that well. Gary Vaynerchuk, Gary V. I don't know Gary V very well. I don't watch his content. I kind of avoid his content. So I'm not going to say that he's like a bad person or anything like that. I'm just saying what he did in this instance was wrong. Okay. And, but his type, because he in reality, he's really a salesman, right? That's what he's good at, is selling. And a salesman is going to love NFTs because it's something that you can actually sell. And if you actually sell one, you make a ton. You know, you're making tens of thousands of dollars if you just sell one. And it's for, a picture like CryptoPunks. Okay. CryptoPunks are like these NFTs where it's like just a really stupid pixelated avatar picture. Okay. So he calls all of these people into a conference call. So Mr. Beast is talking about getting invited to this conference call. So they've got about 13 people in this Zoom call. Okay. And Gary V comes in and he says, this is going to be the next big thing. CryptoPunks, buy one right now. Okay. With like 30, and these were all like movers and shakers. These were like Mr. Beast and like all guys that they've got the money. Okay. That's market manipulation, guys. Right? That is hardcore. That is hardcore manipulation. If they were doing that with a small cap stock, if they were doing that with a penny stock, they would be getting a call from the SEC. Yep, I think that probably is it. That link that Win just gave us there. It is manipulation. You cannot get together with a group of 30 people and coordinate a purchase of a security and tell everybody buy this thing to make it take off and be popular. Okay, you can't do that in the stock market, at least. Okay, but because it's cryptocurrencies, it's like kind of like you can get away with it, right? So here they're doing this, and Logan Paul and Mr. Beast, they're kind of just bragging that they were on the call, that they were cool enough to be invited to this thing of Gary V's little group. But like the reality is they don't realize it, but they were basically in a pump and dump. I mean, I'm not saying that like Gary V's intention was to dump it on them or anything, but essentially it is a pump and dump, because the whole point is to get a bunch of people to buy it so that it catches people's attention, and that becomes the thing that takes off. So, and in my opinion, so very immoral. And the thing that's bothersome about it to me is that these guys seem to be clueless about what they're doing. Like I don't think that they realize that if they were doing this with a stock, that they would be running afoul of securities laws. So yeah, and you know what? It hadn't really picked up too much traction. It was starting to pick up traction on TikTok, but man, like how do you watch that and then like any of those influencers that were involved in that would never take their advice again, right? Because they were in a pump and dump. Guy could go short. I don't know, man. So I'm just looking at the rates here, and I'm like, I should have gone back in. You know, it's not really giving much of a reprieve. When it does pull back, it's not really indicating to me really strong places where I can take a trade. I think I may just, walk with what I made, especially given the current time. Yeah, it's a little, so given that they're moving down at this time, that's unusually aggressive still. So I wouldn't be looking for a reversal, but I'd have to be really careful about what price I took. Gary V holds a lot of Ethereum. I think the EFT market moves Ethereum too. So it's just like he's pumping. He's doing a pump. It's frankly immoral in my opinion. Like, even if it's not illegal, you should be holding yourself to a higher standard, you know? I don't want to say like you made your fortune by dumping something on other people, right? Like, I think that you should make your money by selling people things that are help them and are good for them. And if the NFT market crashes here, which I think is extremely likely, by the way, that you're not selling something that's good for them. And then, even then, in that effect, the only reason that anybody's made money off of it was because you pumped it, you know? It's so wrong. It's so wrong. It makes me mad. And it makes me mad that, like, there's people that are at that level of influence and have that level of influence on society, and they appear to be that clueless. You know what I mean? There's so many other people, and I'm not even just talking about myself, but there's so many other people in the future space and even in the stock trading space that are much smarter than that. That I would rather have being the influencers out there than those jackoffs. Like, I gotta be careful because I don't want it to be a personal thing. I don't really know a whole lot about them. I just feel like you should know that that's wrong if you're going to be in that position of influence. Man, they are just not backing up here at all, are they? They're like, yep, Seth, you're gonna regret, if you're not gonna get in, we're gonna make you regret it. So the low of the day was 11.5 on Friday. So for them, if I was to make a recommendation to them, I would tell them, you should come out and say, you know what, we shouldn't have been involved in that. And I didn't realize that what was wrong with it. You know, I've educated myself, and I'm going to take the influence that I hold as an influencer more seriously, you know? Makes me mad thinking about it. How? Let's see here. See, so the 30-year is kind of giving me, it's kind of holding back a little bit there, right? The 5 and 30 though. Okay, so we need to. The 10 is actually having trouble with 11.5 there. Like the 30-year ticked up, and a strong uptick too. I tell you what, the S&P has been a hard trade today, hasn't it? I mean, it was kind of like that since the holiday on Thursday and Friday, but even now. You're keeping it to 5 ticks these days? Jeez. Okay, so the 30 is coming back up pretty strongly. I would need to see them get above 28 before I would get too excited about it, because that was an area where there was a little bit of a speed bump. I was reading my Twitter feed and I saw activist investor, and I got excited thinking that they were talking about Activision Blizzard, because I saw Activision Blizzard go through in my peripheral vision, but I think I was just seeing things because they're talking about Dollar Tree. I want to see a activist investor. Maybe they need to go lower first. I want to see Activision Blizzard just go to the absolute dumps, and then activist investor gets involved and kicks Bobby out. I would be all over that. Maria's going to give you 4 ticks almost. Not if your stop is only 5. I'm seeing a lot of stuff also coming up on my Twitter feed now about the CNN report that is unfavorable towards Kamala Harris. Because if CNN is bashing her, then and they're talking about the president, that really that means that the White House really is unhappy with her. There are definitely correlations with other markets in the ES, right? There's like a 90% correlation between the S&P 500 and the NASDAQ. That's not your brain seeking a pattern, right? There is an inverse relationship between the S&P 500 and the treasuries, but that one's a little bit more difficult to sort out. But when you go into statistics, there is a correlation. Here's a correlation, it's just it doesn't matter all the time. I think here this morning is probably a situation where it matters. That the interest rates rising is hurting the S&P 500. Anyone who tells you there is an idiot. Okay. Call me idiot prime. Doesn't matter all the time equals no correlation. That's not true. Listen, Ace, if I can go through and I can do a statistical analysis of it over a 30-year period, and I can find a statistically significant correlation between the two instruments, then there's a correlation. There is an empirically proven, well-established correlation between interest rates and the S&P 500. I watch so many education about trading. My mind is melting. I need to start actually doing something. Well, but here's the thing. See, this is the thing that I Ace seems to disagree with me on it, but I'm not. I have empirical evidence on my side. Trading purely off of technicals, especially like charts and things like this, moving average, crossovers, and so forth, isn't a very effective way of trading. There might have been times when it was effective, but those are long past. It's already been arbitraged out of the market. There appears to still be some order flow aberrations that aren't completely arbitraged out of the markets, but those are still hard to find. But where you can find edge is that the market is not very informationally efficient. And there's a lot of studies as of recent. Probably the best example that I can give you is the inelastic market hypothesis by Gabiax and Gaben, G and K, Koijin, Gabiax and Koijin, G and K. And their study explains the source, or provides a very good theory, at least, with a lot of backing evidence behind why there is excess volatility in the market. And it kind of suggests the same conclusion that people working at it from the other side on the order flow side have done so, that the markets tend to be statistically efficient, but not informationally efficient, because of the way it works. And I'll let you read that to understand a little bit more why, because that would be like a really long discussion. But essentially, there can be information out there in the market that, because of short-term liquidity concerns, isn't actually being accurately factored in. Like, why, with the degree of the move that we've had down in the treasuries, why were they up so much overnight? Short-term liquidity concerns. I don't think that you understand what a correlation is, Ace. Right? A correlation would mean that this instrument and this instrument move together or move opposite of each other if it's an inverse correlation, a statistically significant amount of time that is enough that it is not just random. Basically, that it's statistically significant enough to be shown to not be random. That's a correlation. That doesn't mean that they will move together 100% of the time. It does mean that if you were to trade them, if you were to enact an arbitrage strategy between the two assets, where you take a position in one and you take another position in the other, when that correlation has reached an extreme and you're trading on it reverting back to the mean, that is a strategy with a positive expectancy. And that's what you very much so can do with the NQ. So you find when the NQ has gone too far compared to the S&P 500 and trade it, and you can make money off of it. And you hedge it by taking a position in one and the other, right? So you say the NASDAQ has gone too far, so I'm going to buy the NASDAQ and it's going to buy the NASDAQ and sell the S&P 500 and pocket the difference when it reverts. That's there would be a lot of math involved in doing that sort of a strategy, but that has a positive expectancy. It's been proven. I think Ace must be trolling me on this because he's saying a bunch of nonsense now. TLA trader says yes, and you do not get an edge by knowing it. By knowing what? That there's a correlation between them? I would probably still say that for a retail trader that you probably need more than that, right? I think that one of the mistakes we make when we start out is that we think we're going to find that one thing, right? No, it's nonsense when you say things that directly contradict well-known science and data. I don't get it. Like if he's just trolling me on that, then you should stop trolling me on it, because I feel like I still feel like he wants to know. He has the tendency of that eventually it will get through to him and he'll understand, because he's all about the empirical evidence when it comes to religion, but he's not when it comes to your actual trading and behavior of markets. Well, I don't really use the correlation of the two markets too strongly. So if you're gonna call it that way, Ace, then let's do it. Show me your last 12 months of broker statements, and we'll look at it and see how well you've done. Because I do know that there is one. I can prove it. Let's see if I can find it on... Let's set up a test in the future. What are you talking about? We have hundreds of years of data that we can use in backtest to show the mathematical correlation between them, Ace. Let's read this one. You don't care about historical backtests? It's irrelevant if you're not a spread trader. You're right, TLA. If you're not doing it spread trader, then, well, I wouldn't say it's irrelevant. Wouldn't say it's irrelevant. It's something that you can watch. It's you can come in here. You can 100% come in here and say, "Wow, that was an aggressive move in the treasuries. I think that the treasuries are going to have another doozy of a day where the interest rates raise really high, and ergo, these stocks aren't going to do very well." And that's what's happening today. You can take that trade. You can trade on that 100%. No, this one doesn't prove it. They're looking at the relationship between stock price and interest rate in multiple countries. And they say, in overall, the theoretical argument of negative relationship between stock price and prevailing interest rate is not rejected. So they did not get a high enough value on whatever statistical thing that they were looking at to reject the null hypothesis, but that wasn't enough to prove it. Well, to say that we could never necessarily prove that a correlation will continue to work, but there is a historical correlation between them. And there was today. What type of a machine learning algo? I wouldn't bother with MT5, but they're all the same, right? Ultimately, they should all be relatively the same, and you should be able to create the same kinds of algos. I would on. So if I sat here and did it here in the next 5 minutes, then would that prove that you can do it? Let's see here. Yeah, okay. Wait, I should make sure that I got it like set up to the right one. See, I don't want to on series, I want to experiment. Nasdaq Trader says Ugo short. Yeah, okay. We should do it. How many points should we do it? Oh, I have one that's for NQ. We'll use the one that's for NQ. Nope. Okay. That one is, why was I doing it that tight? Well, we could still work it out here. I'm going to have to be a little faster though. No. I mean, I think it's kind of a ridiculous position to say that the NASDAQ and the S&P 500 are not positively correlated. I mean, come on, man. Dang it. Was afraid of that. We'll see. I'm not doing so well with it today. I've had days where I did really well with it, right? Come on, come on. No? No, but I don't think I have it. They appear to be correlated, but not close enough. No, they're like, dude. Look. Okay, I'm gonna do this. We'll do it this way, okay? Yes. 5-minute bars. Okay. I forget what I started. Oh yeah, CADF. Symbol do NQ 1221. Okay. So when you get below this green line, that means that there is that during that time, there is a statistically significant correlation that is like statistically proven that they're correlated. Or that they're co-integrated. Was it? I forget which one this CADF is. That's co-integrated. Do I have a co-integration one? No, I think that that's co-integrated, right? Co-integrated. Yeah. Now I can come back and I can change my P, right? I change the P to be like 60 minutes, then it should be like 100%. What are you talking about, Ace? Why is a historical test on it? You can forward test it too. It doesn't matter. I can't test into, I can't. You're saying something that's ridiculous. That you're saying something that's ridiculous and anti-science, frankly. And something. Oh, I know what's going on there. Yeah, okay. Yeah, now it says that for sure there's a correlation, right? Probably 60 was too much. 12. No, because I have empirical evidence to show it. Come fucking on. You just don't understand the math. But just because you don't understand the math doesn't mean that you're right. Okay, you're just saying no, it's not. Prove it. But here I am proving it. Like here, there's a significant amount of empirical evidence that supports that they're positively correlated. Right? And it's a correlation that has persisted for a significant period of time. I'm too slow in NQ to be doing this. See that? Yeah, see. Doing it for 4 ticks is also not going to work right, because unless I'm using like stop market orders. Like, okay, so if I do that with stop limit orders and I say less than 3, then I might be able to get it. Yeah. Oop, did that one work or not? Oh, that's one was weird. Okay. The bank account. Well, I'll go and find somebody that's doing it then, okay? But that means that you have to show yours. Well, with the NQ, you can definitely trade that, doing that. I think one, we would have to have a robot to do it, right? But 2, I don't know if the risk profile of that was what I would want. Oh, that's interesting. Oh, dang, that one was unlucky. That one was unlucky. Well, I use it for the treasuries, man. And I actually do okay with it with the treasuries, but it's only a small part, right? Like, how do you go in and you say, "Oh, I use all of these X things," and that the correlation is the part that matters, you know? That's why I didn't use that for my argument. I said I used math. I used math to say there is a historical positive correlation between them. I don't understand why that's no good. That's the best the best proof that you can possibly have. It's a statistical mathematical proof. Okay, I can't go and publish. I probably can't go and publish your stuff in a journal. I can go and do a mathematical study of the the correlation between the two of them and publish that in a journal, right? Witching for water. Frankly, Ace Trades, the way that you trade is closer to witching for water than trying to use a correlation is. Okay, like a cross of a moving average is total bullshit. The fact that you changed your trade, your setup, says everything that we need to know about that particular setup, right? And then we go and we look at something that has a proven historical correlation. And you're like, oh, that's nonsense. That's voodoo. What the fucking hell? What a load of shit. Like your whole like science, you can't take anything you say about science seriously if you can't sit down and look at a proven mathematical correlation and say, yes, there is a proven mathematical correlation between them. Right? I am, because I've already established that there's a proven historical correlation between them. If you refuse to see them, then it becomes more about you and your unwillingness to accept empirical evidence, right? Because you want to say that you do, but the reality is that you, in terms of anything that matters, you don't. Do you not understand what? So just stop for a second. There is a proven historical correlation. Yes or no? There is. I said there is a proven historical correlation. You cannot prove that a correlation will continue into the future. Cannot prove that. Unless you have a time machine. The S&P sure is chopping here. Look at that. Like I can kind of see it here in the NQ. That one was pretty good. But I'm not fast enough today for sure. Okay. Okay. Better. Well, then you go. I have to say, guys, if you're not using actual data, you know, like it's one thing to come in and say, well, I think X thing would happen, and then you start trading it, and then you make a little bit of money with it, right? But how do you prove that the reason you made money was because of the thing, and that it wasn't just random? How far into the future would you have to go to be able to say this is a good strategy or not, right? I can go through with a historical correlation and I can say this historical correlation has existed for 30 years, right? And it's a pretty stable correlation. It's not 100%. Obviously, nothing's going to be 100% correlated, right? But we can show that there's a statistically significant correlation. How that's not a good reason to trade. Like, if you're not going to use scientific empirical evidence to back up your trading, then what are you even doing? What are you even doing? You're basically gambling. Oh, that one was no good. Was I when those ones were not working? Yeah, okay. This one in the S and in the NQ right now is probably not a very good time to be trying to do it, right? Because it's a range bound at the moment. Probably want a little bit of trend going to do it. Now we may end up going lower here, so it's possible. Almost. Seems to me that on the NQ, if you're catching it with a limit order, that it might not work out for you. The excursions are too deep. For me to do that, I'd have to have a much better, a much larger stop than 4 ticks or whatever it is that I'm using. Ouch. That one was close. Good. Good. It would take me a bit to work out where. So if they're 15 at a time, it's only like 4 trades down, which was me getting into the ring of it. This most recent run, though, was pretty good. Missed it. No, now I would have done it. Okay. Hold up. Kind of reversed a little bit. Maybe right there. Close. Treasury's settling in there at around 14 for sure. There may still be the 30-year is so far down there, though, that it really might just trend all day. No one was good. Oof. That one. Okay, that one was no good. Having a hard time seeing 1, 2, 3, 5, 6, 7, 8, 9, 10. Okay. It did come from that first little bit of it. That was a good one. That one looks like a spot that I could have gotten twice there, but now it's probably going to fall back on the other side. Yep, there you go. Okay. Too slow. Too early, too slow. Oof. I had a good run there, but it's turning a little bit more random again. $14 was a spot, but they are below that in the 10-year. Hmm. Hmm. And you know what? The S&P 500 is sure is kind of flirting with an ugly downside, right? I was a little early on that one. That one was luck. It's kind of looking to me like the S&P 500 wants to try and buy the dip, but they sure have been down here for a while, right? Hmm. Hmm. I didn't get filled on that one? What? That one was weird. I think if that one had been a live trade, that would have worked. Yeah, that looks starting to look really positive. Nope. Oops. That one would have been good, but that one would have been good, but no fill. Almost. I'm gonna have like 2 winners and I'll have 2 losers and 2 winners. So right now it seems like, see again, like I don't have enough trend and correlation to really, well, didn't we have, I have to come back and look. We'll write a robot to do it. The problem is I think I would really need to use the book too, right? Good. Mm. Oh, that was terrible. Oh, man. See, I think I'm getting more out of being in line with the trend than I am actually catching correlations here right now. You can definitely see them in the NQs though, right? I don't know if any of you guys are actually watching it, but you know, the NQ will kind of have these sweeps that don't make very much sense, and if you reverse them, they tend to work out. Oh, that one did not trigger, really? And that one was terrible. So I had a couple of them there that like stopped out that shouldn't have. Or from what I was seeing, I think that it was correct, but it was like so close, right? Well, we could try doing it this way, right? If we give ourselves a little bit more wiggle room. Okay. Okay. Nasdaq Trader says, yep, they do till they don't. Yeah. Woo. This could just end up in disaster. They go for new lows, right? This spot right here doesn't seem so bad either. Too late. $74 is fine too. Good. A little bit more good. Very good. Man, it seems like that if you're combination of the trend, the correlation, and some order flow can do okay here, but you're taking on a lot of risk to do it. It's a little fat-tailed, I guess you say. Well, that was amazing. Tempting right there, but oh, it's almost time for me to get going. So I still haven't really shown it because I haven't gotten out of it, but man, I'm really not sure if he's trolling me or not, because I'm sitting here like, if you don't want to come in and take like a scientific approach to trading, then what are you even doing? I don't get it. It's like a situation where it was like how do you even argue anymore? You're not making like any, it's not like it's sensible point. Like what do you even know at this point? I don't. Do I have this set up to, I don't think I do actually. Anyways, I gotta get going. No, it's not here. It's in appearance. Trade column include closed B&L. Good. Much better. Okay. Well, I better get going. Rates rise again to start the week. The week on the rise, period. I will see you guys tomorrow. Make sure you watch that video. I'll put that in here real quick. Make sure you watch our video and leave a comment. In the meantime, stay profitable, friends.